Hey, Jesse here. Welcome back. This is the 10% move. Welcome to the 10% move. I'm your host, Jesse, and we're going to have a blast here. Look, this is not financial advice, this is merely entertainment and education. This is for entertainment and educational purposes only. So I'm basically just a normal guy, regular guy, basically doing an experiment with $3,000 and putting it in the stock market, expecting a monthly 10% return. All right. So the way I do it is I go through the NASDAQ 100 and then I select three companies, three stocks that I think are gonna make the move of 10% in this month, the current month. And then I follow it, I analyze it, and then I give you the rationale of why I think these are the three companies or the three stocks that are going to make the move. Then you decide if I make sense or not, and also watch to see if the assumptions and predictions materialize. So, without any further ado, we're going to go ahead and give you the three companies. If you don't want to stick around for the rationale and why I think these are the stocks that are going to make the move, I'll give you the stocks up front, so that way you know that I'm not trying to bullshit you or trying to hold you till the end. If you don't want to stick around till the end, it's okay. The stocks are Broadcom. That's the first one. AVGO. The second one is Google. GOOGL, or Alphabet, whatever you want to call it. And the third one is Apple. So those are the three companies that are going to make the 10% this month. Now, why do I think so? Why do I think these are the three companies that are going to make the move? Well, starting with AVGO or Broadcom, we can see, analyzing the chart for this particular stock, we can see that the trend still bullish. So we have a bullish trend, and the it is basically inside the upper half of the linear regression channel. This linear regression channel is an indicator that I used a lot and has given me great results. Now, when it comes to the price action, the candle around $237 shows a 3.5% surge. Okay, and it's a very strong volume, and it's reclaiming both the 20 EMA at $225 and the mid channel line at $230, and that is a very healthy sign that buyers are stepping in. I mean, stepping back in. Now, when it comes to the volume of this company, AVGO, we have a spike of the volume, 31 million shares. I mean, $31 million versus 31 million shares versus the average 23 million shares. That's a significant jump, and that tells you right there is a confirmation of the demand near the base of the channel. Now, I also use the RSI 14, and this one indicates that it's at 60.6 and rising. So it's rising from the mid 50s, and that's the support of it, and that indicates momentum. That the momentum is turning up without being overbought, which is very important. You don't want it to be overbought, because once it's overbought, chances are it may probably come down. But if it's not overbought, like it's in the sweet spot, it's not oversold, but it's not overbought either. It's like in the sweet spot. That is a good place to be. Now the EMA stack, the 2050, so it goes 2050, 100 and 200, and with momentum, and that is a classic bullish alignment. Now, when it comes to the entry zone, where can we take this trade, or when can we start piling up on this trade? I would say entry zone 233 to $238. That is the sweet spot for best results. And within that mid channel, so that is the mid channel support, and is ideal for a pullback according to the RSI. If the RSI holds at 55, right? Now the target zone for our 10% this month is 255 to $260. That is the near the top regression channel, which is the high for August. Now the stop loss, because you don't want to get into the trade and not set your stop losses, lest you are, I mean, the stock goes against us. So I would suggest like a 4% risk. So you set up the stop loss around $224. I mean, from 224 to 226, around that range, you can set it up, and that is just below the 20 EMA, which is ideal, and it's prior to the support. You can set it around there, and that basically limit the downside a little bit. Some people set the stop loss a little wider if they're more risk tolerant, but if you are risk averse, I would suggest a 4%. In my case, I'm not gonna set any stop loss because I know this company is solid. Even if it goes down 10%, it'll definitely come back. So I don't bother with that. Now, when it comes to the risk reward ratio for this particular play, we're talking about a 2.5 to 1. These are very good odds. 2.5 to 1. And it's very favorable short term, for a short term swing, which is the one that we're looking for. The confidence for this trade is very high. It's a very high confidence. It's around 80% likelihood of us getting, or are getting, these 10% within the next 7 to 20 days. I would say within the next 30 days in this month, because the momentum, the volume, the confirmation, the EMI alignment, it all is very positive for this play. All right. So we can say, I mean, a few notes to consider. The RSI crossover above its signal line, 54 to 60%. That supports, the support continues the energy upward. So it's an upward energy which is being supported. Now you gotta watch for the sustained clauses above the $238 to 240, because that would confirm a short-term trend resumption. So we need to be very aware of that and cautious. So if the price fades under $230 with an RSI less than 50, then the momentum would likely stall a little bit. And that is when you have to reconsider. You either tighten your stop loss or you exit around that point. But that's just to keep in mind, just in case. Now, the breakout over $255 with an RSI of 70 plus, more than 70, we're talking about, so that could extend gains a little bit. So the same way that you could go down, and you would have to tighten your stop loss down there, there is also a likelihood that if it breaks over $255, and the RSI is above 70, then that could extend the gains toward, and a lot of people tap out and leave because they get excited. But I would suggest that if that happens around 265, 270, we can reach that point. So it's something to consider as well, not leave too early. And that move actually could be a little bit beyond the 7 to 20 days, could be beyond 30 days or whatever. But hey, if the stock is going up, it can last 100 days going up, and I would still continue taking the ride, right? So, in summary, when we are summarizing this stock, AVGO Broadcom, we can say that Broadcom right now is kind of rebounding, and is very clean. The rebound is very clean, and it's got the, so it's coming from the channel mid support with the renewed volume strength that we can perceive. Now the technicals for this one is very favorable in order for us to make a swing trade that would take around 7 to 20 days. I would say 30 days, something like that, toward the 255 to $260, provided it holds the $230 and the 20 EMA at $225. Now the confidence is really high for this setup, right? And the momentum and the structure align very well with the style that we have, right? So that is Broadcom. Now, let's analyze real quick our second pick, which is Google. This is why I think Google is going to give us this 10%. First of all, the trend for Google is still inside the upper half of the linear regression channel as we see there. And that means that the long-term structure remains bullish. If you see the chart and you zoom out, it's a uptrend, bullish uptrend. Now, the recent action for Google, it just bounced sharply off the mid-channel linear, the mid-channel line, around $247, $246, and it claimed the 20 EMA at $243 with a 2.26, 27% candle on a solid volume of 27 million shares. That's a massive volume. And speaking of volume, we can notice there it's very noticeably above the average right here. So the buyers are stepping in, and that is exactly when the trend continue. So I also use the RSI 14 for that one, and we can see that is at 60.7, and that is it is also rising from the oversold mid 40s, the mid 40 zone, and now it's crossing back above the signal line down there. Up there, 61 versus 54. All right, this is an early phase of a momentum reversal that we have to notice. Now the EMA stack goes 20, 50, 100, and 200 there, which is a very strong structure uptrend, and the uptrend is confirmed. Now, when it comes to the swing trade we're looking for, 7 to 20 days, 30 days this month, the entry zone for that, I would suggest $247 to 251, so around that range. That is ideal for a near mid channel, the 20 EMA. So we got to watch the RSI also at 55. That keeps the 55 range for a confirmation. Now, our target is the 10%, and we're looking for 272 to $276 around that range. We can sell, we can leave. So that aligns with the top regression channel, which is the previous high resistance that we had not a long time ago. Now, when it comes to the stop loss, where to set it, I would say around 240 to 242, around there. That is just above, just below the 20 EMA and prior low of, and that way it would protect us against a false breakout, right? And now the reward risk ratio for this one is 2.3 to 1, which is very good. It is very attractive for a short-term skew, and the confidence level very high. We're talking about over 78% of accuracy that we're right. We have a 78% likelihood of having this momentum. And so the momentum shift, the volume, the confirmation, the trend structure, the support, all this is positive. So it is very likely. Now there are a few notes that we need to consider with this one as well, and is that the RSI crossover above the moving average, right? So plus the high-low pattern, that equals a short-term bullish divergence confirmation. Okay, we got to keep that in mind. Now, we have to also watch the sustained clauses above the $252, and that is a breakout trigger for the next leg up, and that's when we make a party. Now, if the stock fails to hold at $243, which is the 20 EMA, or the RSI dips below $50, as we see down there, the setup weakens a little bit, and we gotta, be alert. And the volume expansion plus the RSI plus, goes 65 within the next few days, and that would signal an acceleration toward the $270, which is what we're looking for. Now, in summary, for Google shows a kind of a textbook bullish continuation setup after a healthy pullback. Now, the volume and the RSI confirm renewed buying interest. Now, holding above the $243 support, a 7 to 20 day swing toward the $270 to $276 is very possible. So the confidence is very high, is high confident, and the risk is is moderate, very modest. Is an excellent momentum alignment that we have right now. Now, last but not least, we're going with Apple computers. Now, in terms of the trend for Apple, we have an uptrend, right? So the uptrend remains intact within the upper region of the linear regression channel through the though Apple recently tested its mid-channel support, which is something that we have to take into account. So the price action for Apple, uh, regarding that, we have the stock bounced off the $241 support zone and reclaimed the 20 EMA at $249. Now today's candle closed green, positive 0.63%. It's not a lot, but it's positive, right? So now after two section of high lows, right? So that kind of tells you that we're going up a little bit. So subtle confirmation of a potential reversal of the downtrend, and the volume 33.9 million shares, right near average, right near average. Doesn't say much. So it's like an accumulation quietly resuming, but not explosive yet. It is not saying much. So the RSI 14 that I use is at 52.8. It's like a modest recovery from the more or less around 45 lows that we had. So it's still low below the bullish strength, which is 60 plus, but curling up a little bit toward the holding line above the median line. So we see that as a positive. Not great, but kind of positive. So the EMA stack goes 20, 50, 120 is consistent long-term strength structure still present there. So for a swing trade, we have an entry zone of $247 to $250, just above the 20 EMA. Is ideal for the entry with the RSI turning up. Now the target zone for the 10% that we are looking for, we're looking for 272 to 275. That is the near the top regression channel and that we had late August. And when it comes to the stop loss zone, I would suggest 239 to 241. That is below the midline and support shelf. And the reward risk ratio, we're talking about 2 to 1 here, which is good. It's acceptable, right? It needs to follow through the volume and all that, and a lot of other things need to get in place, need to get aligned. But at least that is something right there. Now the level of confidence here is kind of moderate, it's kind of medium moderate, medium high, I would say medium high. 70% accuracy, let's say 70% likelihood of this happening. So the structure, let's say the structure is good, the RSI is still mid-range, and it's stronger momentum confirmation, just that. But then other than that, everything is good. Now, there are a few notes, quick notes that we need to consider, and is that the RSI has bottomed and crossed its signal line. That's one thing. So it's early like a bullish rotation, but not yet a full momentum surge. So we gotta keep an eye on that. So the 20 EMA and linear regression, they align. I mean, the linear regression midline are going near 249 to 250, forming a pivot zone closing above 251 with RSI over 60, and that would mark a confirmed breakout. We're waiting for that. Now we gotta watch the volume, and so they push toward 40 million shares or more. That would validate the institutional support, and that's what we're looking for. If Apple dips below 240 though, it risks sliding toward 230 to 232, which is the lower channel bounce, which would reset the short-term thesis. And at that point, you could either leave, cut your loss, or just keep riding it as a long-term investment or whatever. But we'll see. We'll see how it goes. Now, in summary, Apple is forming a constructive base inside the regression channel. So the RSI improving, the EMAs are intact, but momentum is still building. So we're still waiting. So we gotta expect a lower grind higher versus the AVGO or Google that we just analyzed. So yet risk remains controlled. There's not a lot of risk there, and it's got a very clean or clear structure. So moderate to high confidence setup, $247 to 250 entry, targeting the 272 to 275 around 7 to 20 days, 1 month or something like that. So that's basically the analysis of these three great companies. I've been talking about Apple and Google was up anyways. But you get the idea. You get the idea. That's exactly what it is. And that's basically all I had for today. So if you like this content, please, I please you. I mean, please, I ask you, please, hit the like button so the algorithm knows that this content is good and suggests it to other people. And also subscribe. All right. Also, don't forget to hit the notification bell button so you don't miss anything. Right. So as soon as I upload, then you are right there, because I upload sometimes giving updates on these takes, on these positions. They're telling you to jump off or to add some more, or give you some updates. And I also give you the next picks that we're gonna have for the next month, and so forth and so on. And you don't want to miss any of this. I come here every Sunday. At least you know that every Sunday you're gonna see a video. But I may come up for an emergency broadcast, and you don't want to miss that. All right, so that's all for now. As of right now, thank you very much for watching, and I'll catch you on the next one.